Most investors would consider total return as being the primary consideration in selecting an absolute return fund. However, I would consider other factors as equally as important, which should be considered, such as the investment team. What is the background of the investment team? How long have they been managing funds for? How long have they been working as a team for? And also, what is their level of experience in managing their particular strategy? Secondly, risk and volatility of the fund. It's well and good to identify a fund that has generated very strong positive returns. But how much risk did the investment managers assume in generating those returns? Some easy questions could be answered to give you a sense of this level of volatility and risk. The percentage of positive months to negative months. What was the fund's strongest month and what was the worst month recorded for the fund since inception? Other metrics, such as volatility metrics, will give you a good indication, such as standard deviation and Sharpe ratios. Another good question to ask is what was the maximum drawdown of the fund? That is, what was the largest loss the fund has ever experienced from its previous high point? Thirdly, the liquidity of the fund. If an investor decides to redeem their investment in the absolute return fund, how long will it take before they can actually access their capital? Now, it's fair to say since the GFC, there has been a strong trend towards greater transparency and greater liquidity, to the point now that funds like the Bennelong Kardinia Absolute Return Fund are now offering daily unit pricing and daily liquidity, and the minimum investment size has now fallen to $20,000, making it much more accessible for investors to invest in these strategies. And fourthly, what risk controls and disciplines are in place? Are there exposure limits that need to be adhered to? Are there stop-loss triggers that need to be adhered to? And what other investment restrictions are in place that govern what the investment managers can and can't do? And finally, the longevity of the track record is very important. Ideally, it would be great to see the strategy managed through different market conditions, bull markets as well as bear markets. As a rule of thumb, a minimum of 3 years is considered important before investing in an absolute return fund. However, the longer the track record, obviously the better. The Bennelong Kardinia Absolute Return Fund was launched in 2006 and has just now passed a 7-year track record.